Hi everyone, and welcome back to a new video of the Real Estate Masterclass. And today we're going to discuss one of the most exciting topics, your taxes, box 3. So for those of you who are new to the Netherlands or are living in the Netherlands, let me just give you a quick introduction on how the tax system works. In the Netherlands, we have box 1, 2, and 3. Box 1 basically means, you have a job, you pay tax over it, 50% in the worst case. In box 2, you actually own more than 5% of a company. So you basically own companies, you get dividends from it, and you pay dividend tax if you get the money out of a company to your personal name. In box 3, it's about your personal assets, your wealth. And box 3 is one of the most heavily discussed subjects for the past few years, where we've gone through a lot of changes. And if you are interested in knowing how box 3 works in the old system, the current system, and the future system, stay tuned because I'm going to explain to you how that exactly is going to work. So before we deep dive into the new video about the box 3, don't forget to subscribe yourself. Every week we publish new information about the taxes, your wealth, how real estate works, stock investments. So subscribe yourself to show us that you really like this video and that you get value out of that. So as you can see from my screen, this is the new system of box 3, and this document has officially been published by the Minister of Finance of the Dutch government. So below the video, you can see the original Dutch version, which you can download. And you can also download, of course, the English translated version, which should help you to understand how the Dutch system is going to be from 2027. And we have another video specifically for you to explain to you how the current system works. So all of these is for free, of course. So that's why it's just a little thumbs up. And of course, subscribe yourself would help us a lot. And if you have any questions, let us know in the comment section and we'll try to answer all of them as soon as we can. Yeah. So let me just quickly give you a quick introduction about how box 3 system works, and of course in the context of real estate investments. So in the past, a few years ago, when I started doing real estate investments, I could actually legally not pay any taxes on my rental income and on the fact that I had more equity than debt in my properties. So it sounds very strange, but yes, it was. And it was really possible to actually own real estate and never legally pay taxes over them. So how does that work? So how was the old system? So the old system was basically, well, your personal wealth in real estate is being calculated as what we call the value of the real estate minus the debt. So if I would buy, let's say end of 2020, I would own a property, right? On the 15th of December, I would buy one. I would be able to borrow about 80% against the value of the property. So let's say 200,000 euros. And I could get 80% as a loan on it. So that would be 160,000 euros in the form of a mortgage. But the value of the property, according to the Dutch tax system, it's called what we call the was value of 2 years ago. So it could be very easily that the was value was 140, but my debt was 160. So I had a fiscal negative asset position of minus 20,000 euros. So from a fiscal perspective, I wouldn't have to pay taxes in box 3 over my personal assets. And at the same time, the rent I kept on getting in, let's say 1,200 per month, I kept on getting in. I never had to pay any taxes over it. And therefore it was very advantageous to own real estate on a personal name where the prices went up every year by about 20% and I never paid taxes over that. So at a certain point, of course, the Dutch government decided, you know what, it's kind of not really fair. So let's change the system. And it kind of makes sense, right? I mean, I never paid taxes over it legally, so why wouldn't you get into the real estate investments if you knew how the game worked? And that's how kind of, Real Estate Masterclass also taught a lot of people not to legally pay taxes. And then the system changed. So we're currently in the transition system, and the transition system of box 3 actually entails the following. It means that up till end of 2026, maybe even 2027, but right now, legally and, what has been communicated, they want to change the box system to a new system in 2027, where the government has decided to introduce a new box 3 system, wherein taxes would be levied on the actual generated income instead of an assumed sort of return on the assets, which is the current system, which I'm going to explain shortly right now as well. So in the current system, we're in a transition system up till the new box 3 system, which I'm going to explain to you in a minute. In the current system, they kind of decided from the old systems, you know what, we're going to add different factors to different kinds of asset classes. So for instance, your savings, it was charged at 2% in the old system. And they decided, well, it's not really fair because, you know, on your savings, you get like maybe 0.01% interest over it, or like 1% in the current system. So we kind of need to consider savings as a different category. So they said, okay, savings, you'll have a certain percentage. Your assets, it will probably on average generate about 6%. And on your debt, we'll also add like 2.47% as a sort of like, you know, percentage on it to sort of add different weights to different asset classes or classes, therefore generating a different return. Well, the short summary is that you do end up paying more taxes over it. In fact, we've also built a box 3 calculator for the transition system, which you can download for free and use it, which you can find below this video in case you want to calculate it. And you can look up our other video where we explain how to calculate your current box 3 system in the transitory system that we're currently dealing with. Yeah. So from the old system to the current system, it's okay. You know, it wasn't really that bad. In the worst case, I would pay about 2.2% over my wealth, let's say on an annual basis in the current system, right? And then the government said, you know, we should actually charge taxes on the actual income because, you know, some people might make on their assets, I don't know, 50% return. Some people make 10% return, but assuming 6% return is not really, well, fair to every investor. So they want to change the system to the actual income that is being generated, and over that, they want to charge the interest rates. So we have translated the official document from the Minister of Finance. This is the English translation. Again, in case you want to review it by yourself, you can download this document from the link below. And let's have a look actually in how the new box 3 will work. So they're going to tax again on the actual return. So as it says here, the government has drafted a proposal to introduce a new box 3 system, and under this new system, tax will be levied mainly on the actual income a person has from assets. And as a result, people with low returns, such as interest on savings, will pay less tax than those with a higher return, such as a price gain on shares or crypto or property appreciation. So let's have a look at how the calculation that works in the actual, in the new box 3 system. And again, the focus is on the actual return. So they've defined, first of all, the different kinds of asset classes like bank deposits and savings, investments, real estate, other assets, including like crypto, paid art, lending insurance products, claims, and you have a different category called debt. So how you calculate your total income for box 3 is the following. You add up the total, the actual income of your assets all together, and they make a small difference in what we call capital growth and capital gains. So in capital growth, you'll add up the interest that you received on your savings, the dividends that you got, the value developments or also price increases on your investments and other assets, but also, of course, your rental and lease income from real estate and other personal uses that you have from that. Then in the capital gains or the vermogenswinst, you will only be taxed if you actually make a profit from the sale of real estate or a profit from the sale of shares in the startups and scale-ups. So basically, if you would sell your shares, owning, you know, scale-ups and startups, and therefore making a profit on that. And in the new box 3, you can actually also deduct expenses such as the interest that you're due, the bank account cost, the transaction advisory cost for the purchase and sale of investments, and of course also property maintenance costs that are involved with the property. So what you currently see is that in box 3 of your personal wealth situation, they really consider it sort of as a system where you have all kinds of income that you add together. And from that, you actually deduct the expenses. And that is what we will call your box 3 taxable income, also called total income minus tax-free income, which is sort of like a threshold number. And from that, you'll be taxed on that. And let's have a look as well at how it's going to be calculated. So you see a two-step way. So total income minus tax-free is a box 3 taxable income. If it is less than a tax-free income, which in the example further down will be about 1,000, you pay no box 3 tax. So your total income minus tax-free income, that will be multiplied, the difference will be multiplied by 36. So that will be also called your box 3 taxes. And we'll have a look at the examples wherein you can actually, get a clear picture of how it's going to work. So here you have also the option to offset losses. That becomes possible, which in the current system is not possible. And the proposal is that losses above a loss threshold may be offset against profit in subsequent calendar years, and you'll see how the calculation works a bit later. And also in the official Ministerial Finance document, it is being stated as the following. Please note, all rates, percentages, and amounts are not yet finalized. For illustration purposes, calculations are based on a tax-free income of 1,000 euros, a loss threshold of 500, and a tax rate of 36. So let's have a look at how that's going to work. In the first calculation example, as you can read here, Mo only has savings. So Mo only owns savings in 2027 at 500,000 euros at the beginning of the year. And on these savings, he receives about 2,500 euros in interest in 2027. And the bank basically charges 20 euros in fees. Mo has no debt. So the box 3 system, how it's going to work, it's going to work as the following. So result from assets and debt is 2,480 euros. How is that going to be calculated? It's two numbers here. Basically, it's 2,500 from the interest he got on his savings, minus the 20 euros in fees, in banking fees, like, you pay for a bank account. And therefore, the result is 2,480 euros. So as you can see, the 2,480 euros, there is 1,000 euros tax-free income, which will give you 1,480 euros in taxable income. And over that, there will be a tax rate of 36% charge over that, which will give you a 533 euros in taxable box 3. So basically you need to pay 533 euros from 2027 if these percentages, these numbers will be the same in that year, of course. Also, don't forget, this is a direct translation of box 3 of the Ministry of Finance. No rights can be derived from this document. Consult your own tax specialist and tax authorities if necessary. And if you do have any questions, feel free to send an email to us, or of course, have a free call to see how we can actually help you with taxes and of course, real estate investments. So this is how the actual system is going to be if Mo only has savings. So let's have a look if you own, for instance, then real estate. So in the calculation example in number 2, Ravi has, in addition to savings, 2 properties as investments. And let's have a look at how that calculation is going to be. So Ravi has about 100,000 euros in savings. And besides his own house, he owns 2 properties with a total value of 1 million euros. And the properties have increased in value in 2027, but he has not realized this increase through sale. So in other words, his properties went up, let's say, to 1.1 million or 1.2, but he has not sold it, and therefore the gains are not realized. He receives about 50,000 euros in rental income from the properties, 500 euros in interest on the savings, and pays 20 euros in banking fees. And the properties are financed with a mortgage debt of 500,000 euros, also called 500,000 euros. And he pays about 15,000 euros on interest per year, which is about 3% per year. So how then do you calculate actually the actual income or the result from assets and debts? You calculate it by the following. So let's have a look at the 500 euros. Where does that come from? It comes from the interest on the savings, and it comes from the 50K comes from the rent that he got from his rental properties. So 500 plus 50,000 is, 50,500, but he can deduct, of course, his cost from it, which is 20 euros from the banking fees and the 15,000 euros on the interest. So that will give you a 35,480 euros. That is a result, an actual result from assets and debts. And as you've seen before, the 1,000 euros, so 35,480 euros, there will be a 1,000 euros tax-free income that can be deducted from that. And from that, you determine the taxable income, also called 34,480 euros, and you multiply that by 36%, which will give you a 12,413 euros in box 3 that you need to pay in taxes by the end of the year. So as you can see from this calculation, and this is very important, I think, to understand, is that if you own property in box 3 and it goes up in value, you're not being taxed on that. What you are being taxed on it is actually the rental income from it. And you can deduct the cost from it. So it's almost pretty much like, again, I said that before, like a company. So you have income minus the cost, which will give you a certain net result. And over that, you'll pay 36%. How does it look like then with Maria in calculation example number 3? So Maria is an investor with losses in 2027, and let's look at what she invested in. So at the beginning of 2027, Maria has 100,000 euros in savings and 500,000 in stocks in an investment account. She receives 500 euros on the savings account and pays 20 euros in fees. Now, during the year, Maria withdraws 10,000 euros from the investment account and deposits another 20k into it. And by the end of the year, the investment account is worth 480,000 euros. And the management fee for the investment are 20 euros. So let's look at the actual results generated. So first of all, she got 500 euros in savings on the account. And here you see the number 30,000 euros. It needs to be minus 30,000. Why? Because here it says balance at the end of the year. It's 480,000 euros minus the balance at the beginning of the year, which is 500,000 euros. Minus the deposits that were made is 20,000 euros, plus the withdrawals, which was 10,000 euros, which should give you a minus 30,000 euro negative. And because you've made some cost involved, right? So for the savings account and the management fee, which is 20 euros here, the management fees, and another for the accounts, 20 euros. So basically 500 euro is the only, positive result you got in that year. Minus the 30,000 euros minus the 20 euros minus the 20 euros gives you actually a minus 29,540 euros. So because the result is negative, no box 3 tax is due therefore in 2027. So by the time when you see this video, this will be updated. So it's 500 minus 30,000 euros minus 20 euros minus 20 euros gives you 29,540 euros. So how does that work in 2028? So Maria starts the year with 100,000 and 480 euros in savings and has 480,000 euros in her investment account. So as you can see, the year she ended in 2027 was 480,000 euros. And in 2028, she receives 502 euros in interest on the savings and pays 40 euros in bank and management fees, and Maria makes no deposits or withdrawals from the investment account, which increases in value to 560,000 euros over the course of 2028. Well, this is interesting because right now, as you can see, this number 80,000 euros appeared. And where does it come from? Well, it comes from actually the fact that Maria's account went up from 480 to 560,000 euros. She sort of made like an 80,000 euro gain on it, and 502 euros from the interest she got on her savings. Minus 20, which gives you 80,000 euros, 462 euros, a positive result over which taxes probably needs to be paid over it. And as you can see here, minus 1,000 euros, minus the 29,040 euros from the year before, which you can see here, you can see that actually there is therefore the option in the new system to offset the loss into the new year, and therefore you only have a taxable income of 50,422 euros times 36%, which gives you 18,151 euros in taxable income in the year of 2028. And this is very remarkable because why do you see that? Apparently they make a difference also in the type of investment category. So your investment property, if it goes up in value, you're not being taxed on it because the profit, the capital gain is not realized. However, because I think they assume therefore that savings and stocks, they're more liquid. So therefore you can, consider it as sort of like realized gain, you will be charged on it. So basically if your account goes up by 50k, you immediately have to pay 36% over it. If it goes down by 50k, you can offset the losses with the next year where you do make some profit. So they do make a distinguish between actually realized capital gains, right? And of course the capital growth, which is then, in this case, the shares. So they do make a small difference actually in the type of assets that they have. Now, if we go to the calculation example number 4, Sarah has 50,000 euros in savings and is just starting with an investment package of 2,000 euros. She receives 1,000 euros in interest in 2027 and earns a 7.5% return on their investment package. And the bank charges 20 euros for both the savings account and the investment account. So how do the numbers then look like? So if we take into account that she made 1,000 euros interest here and she made a 7.5% return over the 2,000 euros investment package, that should give her like 1,000 plus 150, like 11,050 euros. And you can see that she also made some cost. So 20 euros was charged to her on the savings account and the investment account. So that's being deducted from that. So it should be 1,000 euros plus 150, therefore 1,150 euros minus 40 euros gives you a 1,110 euros in positive results from assets and debts. And because there's a threshold of 1,000 euros, she has a taxable income of 110 euros. And over that, 36% is being taxed on it. So therefore, Sarah has to pay in 2027, 39 euros in box 3. I think, a couple of lessons just to share with you with this one. So again, no rights can be derived from that, but there's a very important lessons I think to gain from that. So compared to the current box 3, you will see that the new box 3 will probably be a bit less, favorable for personal wealth taxes. You will end up paying more because in the current system, if you don't have any debt, you'll pay about 2.2% over your total worth of your assets. And in the new system, you will actually be taxes over, your shares that you have, 36% over the interest, dividends, etc. Above, of course, the 1,000 euro taxable threshold. Above the 1,000 euro tax-free income threshold. So the lessons therefore are summarized is: 1, real estate does seem to have a different favorable position in terms of the box 3 systems. You can consider it sort of like a deferred tax. Only when you sell it, you have to pay taxes over the capital gain realized. Second is that shares are going to be apparently taxed. Third, 36% of all your income from box 3 apparently will be charged as well. Fourth, it's pretty much similar like a company, right? So you have, income coming in minus all the costs that you make. Over that, you kind of pay 36%, which is, less favorable than the current systems. But it will probably be more on the actual results realized. And I think one of the reasons why the government does that is because, the difference between box 1, which is labor, hard intensive labor, active labor, will pretty much be the same between owning a business and owning your personal wealth tax. So because this system won't take place until 2027, I think one of the good learning lessons as well, try to find a way to make, if you have 100,000 euros or 50,000 or even $1 million in net asset value in box 3, try to go, 10 times maybe that total assets that you have. Why? Because still in the current system up until 2027, your capital gain, so if you make $1 million up to 10 million, you will not be charged on it. You only pay a wealth tax of about 2.2% over it. So that's another learning lesson I could share with you. And I think the positive aspect is also too that all the costs can be deducted. So as I told you, my rental income that I currently get in my current box 3 system, it's not being charged, but I can also not deduct any costs from that. And in new systems, it's kind of like treated like sort of like your own LLC, BV, limited liability corporation, however you want to call it, wherein you'll be charged on your actual net gain. We will probably make another video to see how I'm going to deal with this, how I'm going to restructure assets, and how to, as always in any tax systems, there are always loopholes. So if you like this video, don't forget to subscribe yourself, leave some comments behind, ask me your toughest questions if you want to, and we'll make a new video as well on how we are going to structure our personal wealth taxes and what kind of loopholes there are and how to deal with it in the future in terms of investments. So I hope you like this video. If you have any questions, let us know in the comment section. Don't forget you can download the documents for free, the calculator, as well as the original Dutch as well as English version of how the new box 3 system is going to work. If you have any questions as well, feel free to send us an email or scan the QR code as you can see here above to book a free consultation so we can help you further. And again, I think in the new system, apparently indeed the real estate is going to be taxed differently from other assets. So only when real estate is being sold, you'll be charged on it, taxed on it. and capital gains on like, or even unrealized gains on shares, you will have to pay actually tax over it, which is, you know, not really nice. But again, I can understand because shares are very liquid as well if you want to sell them, yeah? So I hope you like this video. Don't forget to subscribe yourself, leave some comments behind. Looking forward to hearing from you and see you at the next video. Bye-bye.